Now, investors are taking positions ahead of two bond auctions slated for next Monday. The first is the opening subscription for the Nigerian maiden $500 million domestic US dollar bond. The second is the 190 billion Naira August bond auction, which is typical of the, which goes with the usual calendar for local issues. But meanwhile, traders at UBA say the prevailing market sentiment in the domestic space remain calm as the week draws to a close. Kenneth Onuoha, team member assets and liabilities at UBA, joins us now to discuss the likely investor moves. Thank you so much, Kenneth, for your time. So we have two big bond offers opening on Monday, one local currency, of course, the other in US dollars. Maybe we should start with the local currency issue and what you anticipate in terms of investor interest and potentially what yield we could see that bond issued at.
All right, thank you so much for having me, Wally. Like you rightly did point out, the federal government through the DMO did announce that it plans to raise 190 billion from the bond market in the month of August. This is, of course, the lowest offer we've seen since the beginning of the year. It's about 37% less than what we saw in June 2024, where 300 billion was put up on offer. Interestingly, the bond auction will feature three reopenings, namely the 2029s, 2031s, and 2033s, the size of which will be 70 billion on the 2029 and 2031s, and then 50 billion on the 2033s. Interestingly as well, we do expect that rates would actually remain sticky around the last auction print, where it printed about 21.98 for the 2033s and 21% for the 2031s, and of course 19.89% for the 2029s.
Right, really interesting to see such high yields for bonds in Nigeria. It's obviously a reflection of the market conditions. But if we can just speak briefly about this domestic dollar bond offering, and I want to get your perspective on investor appetite for this. Many have suggested that this is sold on arrival and demand would far outweigh the supply, and it's really a matter of time for us to see the yield fall below the issue yield. What are your thoughts?
All right, so like you did point out, yes, Nigeria is going this first maiden domestic USD bonds, which would be open for subscription on Monday and will run for 10 days. The roadshow did hold yesterday, which you graciously did anchor very well. It was such an expose. Dr. Gbadebo took time, and the Minister for Finance did take time to run through the general expectations from the issuance that's supposed to hold, that's supposed to come up on Monday. General investor leanings is towards the fact that we see that this will be pretty oversubscribed because of the attraction. Their target, of course, remains Nigerians, both here and then in the diaspora, as well as non-Nigerians that are, of course, resident in Nigeria. The offer size, of course, is 500 million for the first tranche. We do expect to see it is supposed to be priced at benchmarked using the 2029 Euro bond, and clearly the signs are very obvious that this would obviously be a huge success. And
it's probably the first of many. And so I wonder to what extent that influences how investors position for this, knowing that potentially we could see more, even though no clear commitment has been made for subsequent issues.
Oh yeah, true that. But then we do know for a fact that the interest would peak in this one. People would naturally buy in to see how this plays out, and then this would, of course, set the tone for subsequent issuances. There are talks that there will be a 3-year issuance coming up shortly, but in the next series, or maybe. But then again, this would obviously set the tone for the subsequent issuance. So I expect that the general expectation would be that there will be an oversubscription on this one.
If you can just speak briefly again now for the local bond, because now the Naira bond, because now we have to distinguish the two. Now that we're seeing inflation beginning to moderate, I mean, there are very strong signs that it may have peaked now. How do you think this will influence the pricing going forward for bonds?
Okay, so like you did point out, the MBS did release the CPI report for the month of July, and we saw inflation ease to 33.4, down by 79 basis points from the 34.19 they printed in June. Clearly, this would have the implications, but of course, this was largely driven by food inflation, which dropped, of course, from 40.87 to 39.53. Now, this would naturally translate into the MPR, of course, taking a position where we are more likely to see that the MPC will take a position where the MPR would hold steady. At worst case scenario, we don't expect any further rate hikes at the MPC slated in September or towards the rest of the end of the year. But as far as the bond pricing is concerned, we do not expect rates to go higher than where it is currently. We expect to see that rates might gradually now begin to gradually wind down to the end of the year.
Let's leave it there. Thank you so much, Kenneth, for your perspective. Kenneth Onuoha is team member, asset and liabilities at UBA.